So if you've been on this side of TikTok long enough, you have heard of an IUL, an Index Universal Life Insurance Policy. Before you can truly understand the power of an Index Universal Life Insurance Policy, I have to explain to you the 3 ways that money grows. Well, the first way that money grows is going to be fixed. Now, fixed accounts will be located inside of your bank. So putting your money inside of a CD, putting your money inside of a high-yield savings account. Now, people like fixed accounts because they're relatively safe. So your money is insured by FDIC up to $250,000. But the downside of putting your money inside of a fixed account is that there's little to no growth. So if you were to see it on a chart, it'll look something similar to this. Again, little to no growth. The second way that money grows is going to be variable. Now, this is money inside of a 401k, 403b, TSP, IRA, stocks. Now, people like putting the money inside of these accounts because there is potential for growth. But the downside of putting your money inside of these accounts is that it is risky, meaning you can lose everything that you've put in within 45 days. The average person lost around 22% of their retirement account during the start of the pandemic. Now, if we were going to look at your money inside of a variable account, it'll look something similar to this. 01, dot-com bubble. 08, market crash. 2020, the pandemic. People lost an average of 22% of their account values at the start of the pandemic inside of these variable accounts. So let's say that fixed and variable had a baby. It'll be indexed. Now, you can find index products inside of an IUL and an annuity, both offered by a life insurance company. So you get the growth that you like from the variable products, but also the safety that you desire from the fixed products. That will be indexing your money. Well, if you were to see your money being indexed on a chart, it'll look something similar to this. So back during the pandemic, when people lost over 22% in their accounts, my clients inside of their IUL didn't gain any money, but they also didn't lose any money. So they stayed at 0%. And when the market corrected itself, they received most of the gains from the market, again, without any of the losses. But let's talk about what an Index Universal Life Insurance Policy actually is. So you get 3 things when you purchase an Index Universal Life Insurance Policy. The first thing you get is going to be the death benefit. Now, this is the money that pays out to your family whenever you transition. So let's say I have a 35-year-old woman who wants to contribute $150 a month into an Index Universal Life Insurance Policy. That will yield about an average of $250,000 in coverage. Now, let's say that this young lady passed away when she was 77 years old. Her family is going to receive $250,000 tax-free. That's the death benefit. The second thing you get with an Index Universal Life Insurance Policy is going to be living benefits. Now, living benefits is if you find out that you have some type of terminal, chronic, critical illness, or an injury, you're actually able to accelerate up to 90% of your death benefit while you're still alive. So, for example, let's say this 35-year-old woman, she gets this IUL. She's contributing $150 a month. Now, mind you, she decides what she wants to contribute on a monthly basis. And she has a death benefit of $250,000. Now, let's say at age 77, she suffered a stroke. This will qualify for a living benefits claim. Now she can accelerate up to 20 to 90% of her $250,000 while she's still alive to help her focus on her battle versus stressing about how she's going to pay her bills and keep the lights on. So in addition to the death benefit and the living benefit with your IUL, you also get cash value. Now, cash value is money that is set aside for you out of your monthly premium. So for example, let's say that this lady, she's putting away $150 a month. Now, every time she makes her payment is being divided into 2 separate accounts. The first account is going to pay for the cost of her life insurance, right? Because it's life insurance first and foremost. The second place that this $150 goes is inside of the cash value account. Now, with the cash value account is being credited interest by the insurance company, anywhere from 3 to 13% or better goes inside of this cash value account, basically making your money make money. It's compounding interest daily. So let's take a look at actual cash values for a 35-year-old woman contributing $150 a month. So after 10 years of contributing $150 a month, this 35-year-old lady will have $19,783 inside of her cash value account. Now let's fast forward to 65. She's still contributing $150 a month inside of her IUL. At this point, she will have accumulated $133,377 inside of her Index Universal Life Insurance policy. And according to Internal Revenue Code 7702, it states that this money inside of this Index Universal Life Insurance policy is 100% tax-free. So with an IUL, you receive the gains of the market without any of the losses, meaning you will never lose a dime inside of your Index Universal Life Insurance policy. So if you would like to see what an IUL could potentially look like for you, depending on your budget, comment IUL and we'll run some numbers for you.